On this week's episode of the Stockscores Market Minutes, I'm going to show you the importance of trading alpha if you want to beat the stock market. Then we'll do my regular weekly market analysis, giving you the outlook for the week ahead and the longer term, as well as the trade of the week on INSY. Alright, so what does it mean to trade alpha? If you want to consistently beat the stock market, you have to focus on the stocks that are moving faster than the market. We call those alpha stocks, and they typically do so because there's something going on in their fundamentals that drives investor emotion and interest. In order to find alpha, you have to look for the stocks that are trading abnormally, those that are trading with abnormal price and volume activity. Every day, every week, every month and year, there are alpha stocks that come up. They're again characterized by that abnormal price and volume activity. Let's take a look at a couple. First, a longer term example. This here, the chart of Amazon, and you can see that relative to the blue line, which is the S&P 500, Amazon has done very well. It's been in a strong upward trend and really dramatically beat the S&P 500. What I want everyone to notice is how it behaved early in the upward trend when it traded with the abnormal volume and abnormal price action that we look for. And you should also notice that the stock scores spiked up there. What we want to look for are stocks that break from low volatility with the abnormal price action. That typically is a sign that alpha is in place. Now moving along to a shorter term example, this is a stock that I traded this past week, INSY. It's also going to be the trade of the week that we will review later. But on this chart, what I want you to notice is the abnormal activity, this time on the 2-minute time frame. Here you can see the very abnormal volume relative to normal the previous day, and of course the abnormal price action right from the start of the day. That told you that something was going on fundamentally that drove investor interest. So that's the key thing. If you're looking for alpha, you want to look for that abnormal activity. All right, let's get into our analysis of the overall market, starting off with the US markets. We'll jump over to the Stockscores website, punch in the symbol SPY for the S&P 500 ETF SPY. And here we have the 3-year weekly chart. You can see a nice long-term upward trend, and I can draw a parallel line to show the upward sloping channel that this market is in. Now, right now we're running away from the trend line a little bit. That means that the market getting a little bit risky. It's not too bad here on the S&P 500. Let's take a look at the shorter term chart and emphasize that concept again. This is the 30-day 2-hour chart, and there you can see the upward trend line going back. Then we draw the upper boundary of the channel, something like that. I haven't done it perfectly, but you get the idea. And notice that the market came up to the top of that channel on early in the week this past week, and then we had a little bit of selling pressure as people took profits. And that's what we expect when you have a strong run higher into resistance at the top of a price channel. You usually get a little bit of a pullback, and that's what we had to end the week. Nothing wrong with this chart yet. The trend is still up, but you want to be a little bit cautious as we move forward. Moving along to the NASDAQ 100 chart, symbol QQQ. Here again, the 3-year weekly chart, and most importantly, look at where we are in that channel. We are at the top of it and a little bit more parabolic to the upside in this past week, and that demonstrates that there is some extra risk in the NASDAQ 100 stocks, which have really been leaders in the market of late. And there's no sign of weakness here yet, but anytime you get that strength into the top of a price channel running away from the bottom envelope of the price channel, you have some added risk for a pullback. And given that we are going into September, historically the worst month of the year for the market, I think a little bit of caution is warranted, watching for signs of weakness. Let's also take a look at the IWM chart, which is the representation of the small cap sector, the Russell 2000 index. And again, we've got a nice strong upward trend. Nothing wrong with this, no sign of breakdown. The only issue is that we are some distance above the upward trend line, and that means more risk. Moving along to the Canadian market, I like to always take a look at the Toronto Stock Exchange, T.XIU, and of course the TSX Venture Market, which is $JX on Stockscores. So let's begin with T.XIU, the 3-year weekly chart. And you can see that we are also in an upward trend here, but certainly not as strong as we see on the US market. And right now we are basically stalling at that resistance level and had a little bit of weakness last week, I think mostly on concerns around NAFTA, and that could materialize into more weakness if something doesn't happen in the near term. Of course, the expectation was that the deadline was Friday. I'm not sure whether that really matters. We'll see next week. But the market action on Friday in the Canadian market did show some nervousness around that. Moving along to the 1-month chart, you can see that nervousness as we've generally had falling tops in this and a little bit parabolic move to the downside into some support. So there is some reason for the market to bounce near term, and perhaps that will happen next week. I think a lot of it is going to be really driven by what happens in the NAFTA negotiations. On to the TSX Venture, which is symbol $JX for the index for the TSX Venture. And the TSX Venture has not done great in the last number of months, but as I talked about last week, it showed a little bit of sign of life driven by the cannabis sector, which caught some bids and moved higher. And we continued a little bit higher this week. We're coming off of the lows. In order for a downward trend line to be broken, typically what you want to see is a break from a rising bottom. We don't have that yet. We simply have an attempt to break the downward trend, some work to be done, but it is looking more encouraging for the TSX Venture. Moving along to the currency market, you can see here the chart of UUP, which is our proxy for the US dollar. It's been in a strong upward trend for a number of months. A little bit of a pullback as it also ran away from its trend line, got a little overbought, and is now pulling back to the trend line where it bounced this week and has held the upward trend. So the US dollar remains in a bullish trend. It has been quite volatile recently, and that increases the chance that you will see it move sideways as it sort of reconciles the recent gains. But generally speaking, still a healthy chart in the US dollar. For interest rates, I like to take a look at the chart of TLT, which is an ETF based on the 20-year Treasury bonds in the US. If this chart is going down, that means interest rates are going up. And you can see that for the most part over this year, we've really just been going sideways in a sideways trading pattern above support. We threatened a break of support a few months ago that never materialized. Now we are stuck in this sideways range that we oscillate in, and that means interest rates are fairly stable. But we should not lose sight of the fact that the bias over the last couple of years has been toward rising rates, and if that trend continues, eventually we're going to break down through that important support level and move lower. I wouldn't get worried about interest rates until that happens, but it is something to keep an eye on. And finally, on to the commodity charts that I'd like to take a look at, beginning with gold, symbol GLD. And you can see the 3-year weekly chart has a pretty precipitous downcline for gold over the last number of months, but last week it did manage to close, or sorry, 2 weeks ago it managed to close above its open. That's why we have that green candle. Didn't really get much follow through this week, so I remain a bear long term on gold, but I do want to take a look at the 1-month chart for gold because it shows that the very short-term leg of that downward trend was broken and we are building some rising bottoms. So there's a glimmer of hope there for the gold bugs. A lot of it dependent upon what the US dollar does, and of course the US dollar kind of held up this week and that caused that drift late in the week in gold. So I remain sort of short-term neutral perhaps, but long-term a bear on gold. Moving along to the next ETF that I like to look at, that is USO, which represents oil. And here you can see the 3-year weekly chart again. We pulled back to the trend line. We bounced off of it 2 weeks ago and remain in the upward trend. There's going to be pretty good resistance at the recent high there, and so we may be destined to go sideways for a little while. We probably have one more good week in it before it gets stuck. So I think generally I would remain a bull on oil and oil stocks, but I don't know that I would be initiating a lot of positions here unless something is really showing signs of alpha. So my ratings then on US stocks, bullish in both time frames. On Canadian stocks, neutral long-term and bearish short-term, mostly because of those NAFTA concerns, and that could go away in a week, or we could get a lot more selling pressure if things don't go according to plan. On gold, bearish long-term and neutral short-term, and on oil, bullish on both time frames. US stocks continue to trend higher but are starting to get risky. Canadian stocks showing their sensitivity to NAFTA. Oil has bounced off of its upward trend line and remains healthy. Now time for the trade of the week, this on INSY, which was a stock that I traded on Thursday because it made the abnormal action that I like to look for a sign of alpha. On INSY, we have my action candle indicator triggered by these pink dots there, and that's what tells me something is going on. I've set up processes in TradeStation to look for these, and it's something that you can see in real time if you are a subscriber to my active live webinar service, available on Stockscores.com. And those action candles tell me something's going on, so I entered that trade early in the day, actually at 9:32 on the open on Thursday, and watched it make a really strong gain. Now, the thing I want to emphasize on this chart is not so much the entry signal, but a strategy for exiting these hot stocks. Notice that the trend for the day was fairly linear here, and then it went parabolic to the upside later in the day after about 1:30. When trends go parabolic, it's a sign that investors have gotten a little bit emotional and are chasing, and it's often caused by short sellers who have to cover their positions at any price and push prices up quite sharply. And so that parabolic trend doesn't tend to last, and what you want to watch for is a break of a parabolic trend line as a cue to sell. And that's exactly what happened right there when that parabolic trend line was broken, and that led the way for the market to move lower. So that's something to keep an eye on if you're trading a really super hot stock, whether it's as a day trade or even as a longer term trade. When those trends go parabolic and then the parabolic trend gets broken, I usually run for the exit door because the party may be over. Well, that has been the Stockscores Market Minutes for September 4th, 2018. Hope that you have a great week in the market. Please subscribe to the channel, like the video if you thought it was good. Most importantly, trade well.